What's up, everybody? It's the Common Sense Investor coming at you with another video. And I mean, the hits keep rolling in, people. I just took me a break and said, you know what, let me cover my eyes for a minute. And I laid down and I put on some videos in the background so I could listen to them, let my subconscious pick them up, right? And I couldn't believe what I heard King Griffin say. People, he just tells you right here in this clip that I'm fixing to show you why AMC or any other stock, them squeeze days are over with unless they want it to happen. Take a listen to what he had to say.
And one of the things that's very frustrating in Washington, D.C. is actually the regulatory weight being placed on active managers by the SEC. Markets are efficient because of active managers setting the prices of securities. Firms like Citadel.
Did you hear what he just said? They set the price of the security, people. It's like I've been telling y'all all along. People used to talk about, oh, they pushing the stock down. And I said, no, they push it up too. They set that son-bitch wherever they want. That's why on Fridays, when you think Max Payne, it's a myth, but Max Payne is $7 and it's going to end at $6.99. Why? Because that's where they set the price. Listen again to some more.
We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued.
Again, he says it again. 2 times in less than a minute in this interview. Can you believe this shit, people? He is confessing to market manipulation. That we have a team of people whose job is it to drive the price of the security where they want it. Let's finish listening.
And passive investing, in a sense, enjoys the market efficiency that we create in our work each and every day.
Passive investors enjoy the fruit of their labor, where they manipulate the price of the stock to land wherever they want it to be at every single day of every single trading day, and we enjoy it. We ought to be thankful, is what he's really wanting to say. Look at him looking out for us. Do you feel thankful that he's controlling the price of the securities that you're holding? But then he gets on the SEC's ass. And listen to what he says about the SEC and what they're trying to do.
And one of the things that's very frustrating in Washington, D.C. is actually the regulatory weight being placed on active managers by the SEC, who are in this moment where they've introduced 50 new rules in proposal or final form over the last roughly 18 months. It's almost as if they're in a jihad against active management.
Now let's talk about that comment for just a minute because it's very important, people. There's a lot that the SEC is trying to do, all right, by putting the brakes on motherfuckers like Ken Griffin and them. But make no mistake about it, that don't make Gary Gensler your friend. Both of these men are trying to get the same job. They both want to be the Secretary of the Treasurer, all right? So Gensler going after Griffin and the rest of them is simply trying to keep Griffin from holding that position. But the proposals that he's talking about are the banning of the payment for order flow, the closing of the loopholes that they're using to naked short sell with. He's got some new proposals coming out right now that's going to be controlling the share lending programs of people like Citadel, because they'll hold the stock and somebody will need to borrow it and they'll just say, we got you, just like the brokers do us. Well, they do the same thing to the people that need to borrow shares. Yeah, we got you, go ahead. So then they do. And it's not a problem with naked short selling. It's a problem with naked share lending programs that are going on. Like BlackRock. I did it a year ago. I was telling Donahue this morning. A year ago, I did a video saying, wait a minute, it might not be a naked shorting problem. It could be a naked loaning problem. They may be telling people they got shares to loan and they don't. Well, SEC's got some new rules that's going to put a stop to that. That whatever stocks that they have in a stock lending program in their firm, when those shares are lent out, they have to immediately notify the SEC that the shares are now on loan. When the shares come back, they'll have to notify the SEC we got the shares back from them. That's why there's going to be stopping on shit you see like on Stocko Tracker where there's no shares to borrow, and then all of a sudden there's another 500,000 and another million and so forth. Well, they are naked lending the shares. And Gary Gensler's trying to put a stop to that, and of course Ken Griffin don't like that. All right, but final note, and then when I'm done with this clip, I'll go ahead and let the whole thing play out so you'll be able to hear that without any interruptions, and you can't say that I took it out of context, okay?
Like, you asked what would I change in Washington? I would ask that our agencies run through the lens of how do we embolden American businesses to win.
That's an important statement, people. Listen to that again when I play it at the end. What would he change? If he was in government, he would make it easier for businesses. He's not talking about McDonald's and Burger King and Target and Walmart. He's talking about market makers. He's going to make it easier for them to succeed, which means easier to fuck over us and take our money even more. And I'll see y'all in the next video. Love y'all. Be blessed.
And one of the things that's very frustrating in Washington, D.C. is actually the regulatory weight being placed on active managers by the SEC. Markets are efficient because of active managers setting the prices of securities. Firms like Citadel. We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued. And passive investing, in a sense, enjoys the market efficiency that we create in our work each and every day. And one of the things that's very frustrating in Washington, D.C. is actually the regulatory weight being placed on active managers by the SEC, who are in this moment where they've introduced 50 new rules in proposal or final form over the last roughly 18 months. It's almost as if they're in a jihad against active management